Quality mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
All right, so, geez, I'm a little bit nervous for this.
What? Why? You really talk about just rip into it.
You're the saying twice bitten, once bitten, twice shy. I'm 3 times bitten, 4th time shy.
Just rip into it. It's
Nah,
really fun.
okay. So, I'm going to... There's a few vectors or a few connections between your stock and my stock. First one being my company that I'm pitching, or not pitching, but putting forward, owns 1% of Roblox. It also owns 5% of Tesla, owns 5% of Reddit, owns 7% of Activision Blizzard, owns 5% of Afterpay, as part of a $350 billion investment portfolio. And that's not even the key part of the business.
Jeez, you've got my ears interested.
So the company that I am talking about today is Tencent, traded in Hong Kong, ticker 0700. Hong Kong uses numbers, not ticker codes.
Yep.
Also, there's a foreign depository that tracks Tencent in the US. But yeah, it's a Chinese company traded in Hong Kong. All right. Now there's times here where you're gonna need to take me out of the weeds. So just
Okay.
I got a bit of a spiel.
All right, you've got 15 minutes. You've got 15 max.
So Tencent was founded in 1998. Pony Ma, the key founder, to make internet products for pages. Pages, big business today. That's why I'm investing. No, they very quickly pivoted away from pages and created a social messaging app called QQ. QQ is still a massive social network in China, but in 2011, Tencent released the Chinese super app WeChat.
Yep.
Have you heard of it?
I'm on it.
Are you?
Yeah, I tried to start a Daigao business and got on it.
Oh, really?
Yeah.
How did you find it?
I didn't. Well, it was tough. It's you need to know a lot of the language.
Mandarin.
Yeah.
So, WeChat is a super app, and super apps are a pretty uncommon concept for Westerners. But in a lot of developing countries, super apps are quite common. They're basically the app upon which all other apps are built, and for WeChat, what that means is that, to think about if like Uber, Menulog, the Sydney Morning Herald news stuff, all of that was built on Facebook. So rather than opening separate apps to do this stuff, you were opening Facebook and then you were ordering food through like the app in Facebook, or like you were ordering a ride.
We'll see it.
I don't know if we will, to be honest.
Interesting.
But so that's what WeChat is. It started as it's a social media play, but it's really now a super app. And there's a stat to give you an idea of how much time people spend on WeChat. So the average daily, so WeChat has over 1 billion monthly active users.
Crazy.
Basically, if you're a Chinese person with a phone, you have WeChat. The average daily use of WeChat is 4 hours, which is more than the average daily use of Facebook, Instagram, Snapchat, and Twitter combined.
Yeah, but if it encompasses a lot of those elements, then that kind of makes sense.
Yeah, but still combined. Facebook, Instagram, Snapchat, Twitter, all combined don't equal what WeChat has.
Yeah.
All right, well, I was pretty blown away by that. But okay, I'll take your muted
you get what I'm
response and
saying?
move on. Yeah, of course.
Yeah. It's sucking up those functions.
So one thing is that there's so many users on there. The second thing is that really valuable internet companies are being built on top of WeChat. So it's a super app, as we said, but to give you an idea of the scale of businesses that are being built on WeChat, Didi, which is China's answer to Uber, currently valued at $60 billion, built on WeChat. Pinduoduo, which is a Chinese e-commerce platform mainly focused on the regional areas that Alibaba don't service as well. currently valued at $200 billion, built on WeChat. Meituan, which is China's #1 food delivery app, kind of like the Uber Eats on Menulog of China, currently valued at $230 billion, built on WeChat.
Wow.
Important thing to note is that when these apps are being built on WeChat, Tencent have an opportunity to invest early and see potential, which they've done. They invested in DD, Pinduoduo, and Meituan, amongst a number of others. And then they also have the opportunity to, whatever companies they've invested in that are built on their platform, they can then push to their users. And so like they can sort of have a self-fulfilling prophecy of the businesses that are building on their platform, they can put in front of all their users. So I don't know if I've done a good job of explaining the dominance of WeChat.
Yeah, absolutely.
But it's dominant.
Yeah.
But that's just one business area where WeChat is dominant. So it's the equal largest social network with Facebook. I'm not sure what that measure is, but yeah, it's equal largest, I guess, in terms of like monthly active users or something.
Must be, because it couldn't be total reach.
No.
Yeah.
Well, this is the thing. So we'll get to it, but there's a constraint on Tencent's operating businesses, which is really, it's a domestic operator. It's constrained in terms of how it can grow those operating businesses. We'll get to that. On top of being the equal largest social network with this dominance in the Chinese market, it's also the world's largest gaming company. And just for
That's crazy.
just for good measure, it's also the world's second largest music service and one of the world's largest venture capitalists.
Yeah, that's interesting.
But we'll get to that. We'll get to that. In terms of the gaming business, so it's really got three elements of its gaming business. It develops games in-house under its Tencent Games division. It releases Chinese versions of non-Chinese games, so partners with, makers all over the world to release games in China. And then number 3, it invests in non-Chinese game publishers and developers around the world. And to give you an idea of their reach, this was in 2018, but it still holds true. 4 of every 10 investment dollars worldwide in the gaming industry were Tencent's. 4 of every $10.
Wow.
But then over 7 in every $10 of mergers and acquisitions, so like actually buying game developers and game companies, were Tencent.
Wow.
They dominate this space. Some of the games that they own or have invested in, League of Legends, they own the maker of that fully. Clash of Clans, that mobile game, they own 84% of that company. Fortnite, they own 40% of Epic Games, the company that makes that. They own 5% of Activision Blizzard, which make like Call of Duty, World of Warcraft, a whole bunch of other stuff. And they own 5% of Ubisoft, which makes Assassin's Creed, Far Cry. That's just the top end of a very long list of gaming businesses that they have either fully bought or invested in. They're huge.
Yeah.
Massive.
Yeah.
Now, what they do with this money is, so they've got a number of other operating businesses that do quite well, but I don't want to get too in the weeds on all of those. The two big ones are social through WeChat and QQ, and the gaming stuff. With the money that they make from that, recently I think they made about $5 billion US a quarter in terms of profit. They take that money and then they pay it out. Then they invest it in companies all around the world. To give you an idea, so the company have said they've invested in over 700 businesses. I've found a list of the top 103 that they've invested in, which when I first started doing this, when I started writing this a few days ago, it was worth about $330 billion. It's a live sheet that totals, it's now worth $356 billion. So it's jumped like $26 billion in a few days. But just to give you an idea of some of the companies you may have heard of that they own, that they've invested their profits into. 5% of Reddit, 5% of Tesla, 12% of Snap, 9% of Spotify, 2% of Discord, 18% of JD.com, 10% of Universal Music Group, 10% of Ola, the ride-hailing app, 25% of Gojek, which is a Indonesian
Yeah,
like
the
ride
scooter
hailing
thing.
app. Yeah, 5% of DD, 15% of Neo, the Chinese version of Tesla, 17% of Pinduoduo, 1% of Roblox, your company.
My boys.
So they are just investing money all over the world.
Sounds like the Equity Mates business model.
To give you an idea, and so I guess the point then is that's fine. A company can have a really strong operating business, take its profits and invest it elsewhere. But if it's making shitty investments and actually losing value for the shareholders,
Pointless.
then that's not a good thing. Luckily, that's not what Tencent's doing. The world's greatest venture capital fund is Sequoia Capital, which has invested in 109 unicorns.
Wow.
So private companies that are or were valued at more than $1 billion. Tencent have invested in 52, putting it at the number 2 spot. And then I think SoftBank is number 3. But they've also just got so much cash. Tencent claim that they've done more than Sequoia, but from what I was reading, there's no proof of that. So yeah, they've taken that money and they've invested it well, I think is really the key point. The other thing that they're doing is when they're not investing in companies, they're partnering with really interesting brands and just expanding their dominance in China. So they have the rights to the NBA in China until 2024. They partnered with Lego to develop games for children. Carrefour, the French supermarket giant,
Yeah.
they've partnered with them to trial some retail concepts in China. They're just this like giant conglomerate now that, you know, if you want to work in China, you want to work with them. They've got all this money that they want to invest around the world. And that's exactly what they're doing. And so for me, well, hold on, I'll pause here. If you've got any questions or comments, because otherwise I'll just keep rolling.
No
through.
questions or comments.
Okay. So I think the number one takeaway is they're huge.
Yes.
The number two takeaway is that in a number of key verticals, they're dominant. They're not like a third or fourth player. They're the number one player in a lot of things. In gaming, they're number one in China. In social, they're number one in China. Their app store is number one in China. Their mobile browser is number one in China. Video, they're number one in China. Mobile payments, they're number one in China by monthly and daily active users. Cloud services, they're number 2. But still, they just have all these dominant pockets. And then what you can do is you can line up the revenue that they make from these businesses against the best in class businesses in the world and the revenue that they make. So like you compare Tencent's payments business to PayPal's payments business. It's a little bit smaller, but not that much smaller. You compare Netflix's subscriber revenue to Tencent's video subscriber revenue. Again, smaller, but not that much smaller. Media ads, New York Times is apparently best in class outside of China. Tencent make more than them. In gaming, Nintendo v Tencent are making more from gaming revenue. Social ads, Facebook smashed them in their social category. And cloud computing, you know, like Amazon Web Services, Amazon are a fair bit bigger. But there's this chart that maybe we can share on socials or something. Tencent can compete in so many different categories with the best in the world. It's just crazy the more you read about this company. But anyway, I'm going to get to the long and the short of it.
Nice.
I did some back of the envelope maths for this, and it's a couple of days old, but the principle still holds. The current market value is around $800 billion US. If you strip out the value of all their investments in other businesses, and this is just what I could find, so the top 100. So forget the other 600 the company is saying they're investing in. It's about 350 billion. So 800 less 350, you've got 450 billion left. So that means the market is valuing the operating businesses, the gaming business, the music business, the social media business, the actual operating business at about $450 billion. They're doing about 5 billion in profit a quarter, so about 20 billion in profit a year, which means you're getting a price to earnings ratio of about 22.5.
Yeah.
So you compare that to what, most tech businesses outside of China, the price to earnings they trade at, it's a pretty good valuation for
Yeah.
the operating
Very low
business.
multiple.
So for me, given my track record with stock of the year, I like the fact that there's a lot of upside. That potentially they've saturated the Chinese market, and they're needing to move across to all these new verticals because they will have trouble expanding internationally. But it feels like there's not too much of a premium put on that operating business, 22.5 price to earnings. And then the growth should really come from a lot of these investments playing out. Having 5% of Tesla over the last 2 months would have been a great investment. So for me, that's if the domestic operating business can be a cash cow, and they can keep spitting out profits, and then they can keep allocating that profit sensibly into other businesses around the world. For me, that's a really interesting company.
Massive company.
Yeah, huge.
Yeah, enormous, with fingers in many pies. I think, it's pretty phenomenal when you go under the hood and find out what they're doing with their profits, what they're investing in, the exposure that they have to a number of businesses that we obviously also like investing in. So, good research. I think pretty amazing. My only sort of comments would be around the risk of being a Chinese company and the risk that comes from government stepping in and trying to assert their dominance over dominant Chinese companies. And then also your point around how far until they saturate the Chinese market and have to start relying too much perhaps on their investing side of the business.
Well, I think there's those two questions are interrelated, because I think whilst especially the social media, especially whilst WeChat is compliant with the Chinese government rules around, letting the government basically see everything and monitor everything and all of that, international expansion is just going to be off the cards. Like, we're not going to be downloading WeChat, although apparently you did.
I did.
So, whilst they're complying with the Chinese government, you're probably not going to expect much international expansion of some of their key products. I mean, gaming maybe more so, but not socials. But if you flip it around and they're like, all right, we want to expand internationally, then that might put them in conflict with the Chinese government. Given the fact that Jack Ma disappeared for a few months and apparently was seen last night, but it was on a video call. It was a 90-second video.
All a bit sus. Didn't mention anything to do with his disappearance.
Really sus in a nondescript room.
Anyway,
I think you would expect this business to continue to comply with the Chinese government, stay a domestic operator in terms of socials, try and find some of these avenues like gaming to expand internationally, but really expand their international footprints through investments. I think that's really the play.
Nice, Ren. So we're recording this on the 21st of Jan. We'll take the date from today for performance. And we've got Roblox yet to IPO and Tencent, hopefully something that is not going to lose 50% in value. So I'm sure it's not, Ren. It's a phenomenal business. We might try and get that research available at some point. I don't know how we'll try and get it up, maybe on the website or through potentially an email that we'll discuss in near future. So stay tuned for that. But we'll leave it there. Both are stock pitches for 2021. Thank you for joining us. A reminder that Equity Mates doesn't stop when you have finished with this podcast, though. You can email us at contact@equitymates.com. Follow us on all the social channels or head to our website, equitymates.com/contact. And leave us a voice message or some other information on our contact page.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.